What are standard product costs? Well, generally this is an approach. It's authorized by the Cost Accounting Standards Board, whereby you estimate the cost of certain inputs into the production process, particularly the cost of goods sold. Okay, that is all of the costs that necessarily go into or are incurred when producing a product. These include direct materials, direct labor, and manufacturing overhead. Okay, now the estimates of actual cost are generally compared against what are later become the actual cost once the production is carried out, and any difference between the two is known as a variance. Okay, now how is standard product cost used? When is it employed? Well, generally budgeting. Okay, when you're going to undertake an operation process, you have to set a budget to expend resources to carry out that project. The budget identifies the activities necessary for the process and allocates resources to carrying out that process. Okay, cost control. That's a core managerial function to attempt to reduce costs to promote efficiency and effectiveness. Okay, when you identify a standard cost based upon external data, it gives you a starting point from which to compare the actual costs that were incurred. It will tell you whether the company is operating efficiently, whether you're operating at a loss or a profit, and it will help you make all sorts of decisions in this way. So particularly in terms of eliminating activities that are unnecessary and thus costs that are unnecessary. So it has a cost control function. Okay, it allows you to determine inventory cost, which is a huge component of determining profitability of operations, because once again you're going to assign cost to your cost of goods sold. You're going to subtract that from your operational revenue to see what type of operational income or operating profit you generated. That is going to determine whether operations again are profitable. You're going to record those expenses as cost of goods sold on the income statement. So cost allocation and the process for determining how much the product costs and how much should be attributable to the cost of goods sold is an important metric for all managers. And then lastly, setting prices. If you're going to set prices on your goods, it needs to be based on something or founded on some information about the historical or average current market cost of things. So you would use these again to set the standard cost, to set your pricing for the product. This is particularly true with cost plus pricing, whereby you see what the product will cost to produce and then you build in a margin on top of that. So once again, these are the uses for standard product costs.